Okay. Good afternoon, everyone. Wait for the doors to close. Okay, I'm going to do this and just double check. Okay. So I guess you're all here because you're wanting to find out how you can get regulated, how you can keep being regulated, and how you can avoid getting too many nasty letters from regulators all around the world. So I'm going to cover off on just a basic overview of some of the countries that people like to talk about, countries that get written about quite frequently in finance magnates, the countries that people ring me up and ask about. Just to preface this with, I run a firm in Australia, so specialise mostly in Australian regulation and New Zealand regulation as well. We do some other regulations around the world, but our focus is Australia, so I'm not going to profess to be an expert on every country. The purpose is just to give you an overview and then, if necessary, pass you on to relevant specialists around the world. So we've got a map here. If you can have a look in the corner, and your eyesight's better than mine, yellow means regulated, so they're the tough ones. So you can see Australia, New Zealand, Japan, England. The US is really a no-no. The next category down in the green is newly regulated, so they're people who are countries that are developing their regulation. It's getting stronger. The red is increasing regulation, and purple is minimal regulation. You'll see that the minimal regulation tends to be the smaller countries. So just as a way of introduction, there's a couple of strategies that people I speak to like to review and potentially adopt. One of them, for the sake of giving it a name, we call the top-down. So those are people that are already regulated. They're people that have been around for a while, 5, 10, 15 years. They're the ones that are starting to just get a bit of regulatory fatigue. Often they're people that have been in the US, so they've given up on the US. That captures a lot of people, actually. And they've got Australia, UK, and they're just starting to just get a bit fatigued with getting lots of letters, increasing regulation, and it's starting to think, wouldn't mind having a backup just in case this all basically goes down the toilet and I need to transition my clients so I can keep operating. The second group of people that we talk to are people who are coming into the industry. So they're people who haven't been regulated before and are looking to get started and to build some credibility around the world. So we talk to them about starting in a lower licensing jurisdiction, so where there's lower requirements, or simultaneously getting a low-level license in a top jurisdiction. So we talk in Australia about getting an education license, getting an IB license, and then that gives them the opportunity to develop a track record with a good regulator whilst they're operating their brokerage in a less strict jurisdiction. So just to zoom in on a few different countries, just to give you a background, this is zoom in on Asia. A lot of brokerages for their Asia strategy like to focus and run it out of Australia. So that's a pretty common strategy. What we're seeing is Japan has become very strict in the last few years. So we all know about the leverage restrictions there. The countries that are starting and have new regulation, Singapore, Hong Kong, Malaysia, they're increasing. I don't have a lot of comments about those jurisdictions at this stage because we haven't seen a lot of people trying to move in there. But if anyone has any questions or comments afterwards about any of those countries, be more than happy to talk more about that. So just some comments on getting a licence in Australia, because that's where I'm an expert. So I'll give you a bit of background. That's Quinn, one of our ladies in the office who's an expert at getting licences. If you're operating an FX business in Australia, you need to get an AFSL, which is issued by ASIC, so the Australian Securities and Investments Commission. If you want to be a full broker, the capital requirement, as stated in the legislation, is $1 million. So realistically, you need about 1.5 million to be operating and to get started. The second line there is the educator licence. So those are the ones that we're recommending people who are doing a bottom-up strategy. So they're new to the industry, they want to build up credibility. We're able to get educator licences. I think a lot of people will have heard the rumours that ASIC aren't giving out full brokerage licences at the moment. That unfortunately is true. So we haven't seen one for at least a year and a half. But if you were to either have one or purchase a full brokerage licence, the capital requirements there. The educator licence, we have got those through, and your capital requirements are a lot lower. Some of the main requirements are having a responsible manager, so an RM, and that's someone who's been working in Australia in the FX and derivatives market for either retail or wholesale clients, depending on who you're targeting. They need to have worked for at least 3 years. So we're seeing a saturation of that market. It's been very popular for a lot of people around the world to get AFSLs to hire people to be RMs. It's probably the same in the UK and various other places that we're running out of people, but hopefully the industry generates more people. Then you've got insurance and audit requirements. Just some comments there around, pretty strict compliance and policies and legal document regimes that you have to have. They're standards which follow some of the main regulators around the world. So Australia likes to follow the UK. Some of the other countries that were on the Asia map, like New Zealand, Hong Kong, Singapore, they're pretty similar regimes. They follow the same sort of logic and conceptual structures. So you've got policies, regulatory guides, AFSL, which is the licence, and various laws which require disclosure documentation. New Zealand is another interesting one. So they recently, in 1st of December last year, so 2014, they introduced a new licence for derivatives issuers. As I said, following the Australian system, the capital requirement's 1 million New Zealand dollars. So you're all in FX, you probably know that's probably about £500,000. You have to submit a fairly detailed application to the FMA. We haven't seen the FMA be particularly constructive in their approach to applications. So the possibility's there. The outcome is, depending on your history and the presence that you have in New Zealand, is probably going to be quite difficult, but it's there, and it's something that a lot of people are looking to, if they're from the bottom-up side of things, they're looking to aspire to reach that eventually. The New Zealand regulator being in the corner of the world, they have a different approach. They can be fairly loose-lipped in their responses to people. So that's certainly something to keep in mind if you're a little bit sensitive, because they do make fairly personal comments about applicants based on Google searches and all sorts of things. So there's a warning there for you, but the licensing is there and it is strict. So again, you can see that they've got rules, regulations. You'll be document heavy, policy heavy, legal document heavy. when you're operating as a full broker in New Zealand. In terms of Europe, you'll see there Russia obviously is a big dominating presence. They've recently introduced some new rules which have been discussed pretty extensively in finance magnates. So that's a new regime that's coming in. We've got the UK, which is one of the top ones, which has been operating for a while, which can be difficult to enter, but not impossible if you've got the right people helping you out. There's a few other little countries down there, Malta, Cyprus. Again, they're at the higher end of the difficulty scale rather than at the lower end. Just some comments on each one. So Cyprus, you need to have a Cyprus investment firm authorisation. There's some passporting available to various other European countries, which can be useful. Again, the share capital, €1 million. I'm not going to convert that into pounds for you. You can do that. And then you've got, again, personnel requirements, which small island might be difficult to find the relevant people to meet these requirements. The same applies for Malta. Small island, I'm told that it's the personnel rotate pretty quickly amongst the regulated firms there because the rest of the population is not very familiar with FX. Just some comments here about Russia. So the regime came in around October. I'm not an expert on this, as I said in the beginning, and there's going to be some certifications around FX dealers and specific requirements that everyone's going to have to follow. In terms of America, just zooming in there, we've got the USA. Most people don't want to go there. If they are there, they leave. But it's there. It's a possibility if you're looking to target the US or you've got a very big global expansion strategy. Canada, again, that's a new one that's increasing. So, we've seen some increases in their requirements over the last few years. So trade reporting has been a big one. Leverage restrictions, and then a regulator that's increasing their force. Now we've got the interesting ones. These are the ones that if you're really looking to enhance your licensing strategy, either from the top, so you're regulated and you want to back up just in case everything falls apart. These are the countries that people are starting to look at because they're easy to get into. Things might change, but at least you're there. At least you're in 5 years ahead of everyone. So we've got the Bahamas. I will go through these pretty quickly. British Virgin Islands, Cayman Islands, St. Vincent and the Grenadines. So these are all nice places to visit if you're looking for a nice trip as well. One of the problems that we've seen with St. Vincent's, which is something that I get asked about a lot in terms of getting started there, St. Vincent's, there's some particular laws around holding client money. So that's something that you should definitely explore a little further before heading off to St. Vincent's. But there's facilities there. It's easy to set up companies. It's easier than other places to get the licensing. It's going to provide you with a certain element of comfort. What we have clients talk to us about is the possibility that if everything goes wrong, they'll do a bulk transfer to one of these places. Clients are probably not going to make a big fuss if they're halfway through a trade or if they've developed a relationship with a broker. In the alternative, if you're only licensed in one of these places, you can build up your track record by being a broker, semi-licensed. When you go up to the next stage of licensing regime, you've at least established yourself rather than coming in fresh. A couple of interesting ones, Africa and Middle East. So you'll see mostly red, so things are coming up rather than fully in place in these countries. So we've got Mauritius, that's been a popular one for our clients recently. Mauritius is pretty hard to see on the map. I don't think you can even see, but we call it purple there. Everything's cheap in Mauritius. So you need to get 2 licenses, but the capital requirement's quite low. So it's $1 million Mauritius dollars, but you'll see there that the conversion on Mauritius dollars comes down to about 32,000 US. So you can be operating a broker with pretty small capital requirements. You've got directors, resident directors. Your annual costs for these type of people, you're looking at about 1,000 US dollars to keep a director occupied in Mauritius for a year. And your annual costs for maintaining the license there tends to be around 10 to 15,000 US. So helps you get started. And it looks pretty nice in the photos, but I haven't been there. Israel is finance magnate's hometown, so I won't profess again to be an expert on Israel, but you do see there that the regulator is pretty strict. We've seen a lot of brokerages come out of Israel, so the Israelis are big into FX. Some of the key points there: leverage limitations, varying capital requirements, guidelines around all the usual things, so money laundering, disclosure, insurance, segregated client money. South Africa, that's another one that's sort of on the rise. Again, we've seen people recently getting licensed there. It's something that's becoming more popular, but they do have a regime in place. And it's certainly something that's allowing people to target the African client base. So there's been surges in places like Nigeria and other African countries where they're opening FX accounts. So this is a good launch pad for that. As I said at the beginning, we specialise in Australia, New Zealand. Our clients, they're looking to develop an Asian strategy. A lot of Chinese clients as well coming to establish in Australia to get licensed because it's a popular regime. It's a regime that people understand, and that particular market's very popular with all FX brokers just because of the sheer volume. So I'll turn it over to questions now.
Do we have any questions from the crowd? I think it's a good opportunity to have a regulation expert before you're going to an official consultancy. And here's the mic.
Can you elaborate a bit more about Canada? Because I understand that every province has its own regulator. So if you have one license from a specific province, can you target the whole of Canada?
That's a very specific question I don't know the answer to. Yeah, sorry, I don't know, but I do know generally it's becoming more difficult, but it is something, the trade reporting requirements are there. We've got a couple of clients that have Canadian outposts, so I'm not sure if it's province-based, but my gut feel would be that it's national regulation.
Are there any regions or provinces where people are starting to get nervous at the moment about increasing regulation and either looking to move out of or need to be more wary of?
Anything that was yellow, we could go back to the map. So Australia, definitely people are nervous. ASIC's sending out a lot of letters. They're actively targeting. They're looking to, depending on who you speak to, they're either looking to cut down the number of brokerages that are out there. They don't like it. They write pretty aggressive things on their website. So there was one that came out yesterday about marketing. So Australia, definitely they're cracking down. The same with New Zealand. They send out pretty aggressive letters to people that are already licensed. Like I said before, if you're trying to get licensed, they can be pretty personal. In fact, some of the changes that we've been doing in Australia around responsible managers on licenses, they've also been pretty personal attacks. So, yeah, they're definitely places to be scared of, not impossible, but you definitely need a good consultant to help you. and help you manage it. Have to talk my own book there.
Back to Canada. Sorry. If you're not regulated there and you don't solicit any business, yet you get clients, can you accept them?
This is the interesting one. I won't speak specifically about Canada. I think Canada will be operating the same way as a lot of these other countries do, so Australia, the UK as well. The regulators are trying to clamp down, and so one of the ways they're doing that is saying, well, if you're sitting in Australia as a brokerage, if you're not licensed in Canada appropriately, then you can't be taking Canadian clients. That's their approach. I don't particularly agree with that approach. I would take the view that a lot of people take, is that if you haven't been actively soliciting in a particular country and someone turns up onto your website, then you should be entitled to take them, because that person takes their own risk. So I think you can, not as a Canadian specialist, but I think you should pursue the policy of if you're not actively soliciting in that country but someone turns up, my view is to let people and encourage people to push that approach to the end, because I like to give the comparison, say, with funds management. So if you're a funds manager in Australia and someone turns up from the Cayman Islands or from China, ASIC's happy for you to take that client. The approach that they've adopted in terms of active solicitation and being licensed in the place where the client comes from is specific to FX. So it's a sort of like a personal attack on the FX industry, which my view is should be resisted.
So just looking at the Caribbean, I know you had to skip over your slides, Sophie, but out of the Caribbean jurisdictions, I know there's St. Vincent's and the Bahamas. Your experience of those, which of those would you choose if you were setting up in, just out of interest?
I would probably choose the Caymans, just because the Caymans have a sort of a history of being facilitative with various other popular vehicles like fund managers, special purpose vehicles, accepting money from the US. That would be my pick.
Thank you. I think, add one more aspect which I found interesting, and we have just about enough time to do that. And maybe it's an open question or a takeaway for all of the attendees here, is to what level traders or clients are aware of these details and how much all of it means to them? Do they know to decipher one regulated entity from another, and what weight does it have when choosing a broker? I don't know if you get to hear this from your clients, but for me it would be interesting as someone who covers the news mostly when things turn bad.
My particular example would be the Chinese clients. They definitely take a lot of heed to regulation. Interestingly, they're very skilled at looking up the ASIC registers. So whereas some of my most educated corporate clients don't know how to look up ASIC registers, every Chinese person off the street seems to know how to check an AFSL holder. They can look up the address, they look up the name. If things don't match, our Chinese clients get very nervous because they're obviously getting pressure from their clients. So I would say, there is a lot of sensitivity around regulation. And people do like to have, what the Chinese particularly like to have, these open registers. So there's a couple of countries in there, some of these Caribbean countries and Mauritius and a few other places where the registers aren't openly searchable, and they're not as popular with the Chinese. So yeah, I do think clients are very sensitive to it.
Thank you, and it seems like we're done. So I want to thank you again. It was very interesting. Thank you very much to Sophie Gruber.
Thank you.